indexes are on everyone's tongue at the moment. I killed off my longs. I reshorted the FTSE yesterday. Many of you know I trade the FTSE a lot, and I made a good lot of profit on that, as did many of my members, I'm sure. But I'd said, literally, and you can see it on my profile, you can see it on my YouTube, I screamed and screamed and screamed to you. I said, buy this. Why would you not buy? You have seen the rejection previously. You've seen it happen time and time again. And why aren't you long? And then it comes up and then it dips back and I say, why don't you buy it again? And then it comes back and I say, maybe you should really buy it. And then it comes back again and we say, look, you can see what's happening here. There is rejection every single time. Your long-term timeframes, which you need to study carefully if you want results and understand the long-term spectrum. I mean, my methods are fairly mathematical. You don't need to understand numbers very well, but it's the theory and the principle of applying logic, okay? So it's understanding the long-term swing of the market and how to survive that regardless, because people over-leverage. In pretty much every case where someone loses money trading, it is due to incorrect sizing, incorrect plans, and no idea what you're doing. So I killed all my longs, well in gains. I made quite a few. I trade the FTSE London stock market as well. So I killed off various shareholdings. I shorted yesterday slightly too early at about 7707. I killed it off as you fell about 80 points, so I was completely out. What you're finding now is things are slowing up a bit. I think you'll probably dawdle. You've got US news today, but I'm reshorting higher than the previous high if I can, and I have long orders underneath at key rejection zones. The DAX, I'm still short. I mean, the DAX, I don't know why you would be buying it. Again, like I said, you're asking the dealer if you can pay thousands over the actual price. And the reason why is because you've got this all-time high. And like I said, people always say to me, why don't you buy the highs, Will? Why don't you buy at the top? Well, luckily, the good news is I can actually show you why that's a bad idea. I'm going to show you now why that's a bad idea. Okay, can anyone see it? Is anyone sitting there and wants to put their hand up in the class? Why wouldn't you buy these highs, Will? Why aren't you buying them? Why don't you buy every single time just before the market falls? Why don't you do it? Okay. You can see. I'm showing you live. It's there. Naturally, markets fall after rallies in harsher quantities and principles. So FTSE, the DAX, the US 200, I'm short. The CAC, I'm short. Okay, I'm short all global indexes. Yes, you absolutely have priced in. You've got the Fed saying how great it all is or how it's going to be fine. Whether you believe that or not, it doesn't actually matter. All you need to do is understand that after periods of strength, you get that weakness. That is why, and I'll just get the post so I can put it in the chat box. And by the way, if you follow me, I've posted maybe 800 videos on here, and on my YouTube 250, 60, 70, going on 300. So I've probably done about 1,000 analysis videos on TradingView now, covering everything and anything. But of course, if you want my concrete rules, you have to pay for that. That's just how life goes, I'm afraid. As they say, pay peanuts, get monkeys. I think that's probably the best way of putting it. Many of you hear me say that. So it was this. Okay, I'm going to pop that in the chat box now so everyone can see it. And it's exactly that. Shorting optimism, buying fear. And it really isn't that sort of philosophical, if you like. It's just basically what that means is you will always make more money selling after moves up than buying after moves up. And again, I showed that on the last chart. Okay. And the reason why is because the room to the downside is considerably bigger than the room to the upside. Yes, there is every chance. And as I've said repeatedly, you may break this high. Okay. I wouldn't be shocked one bit if you do. But you've got to remember that people have been buying and buying and buying, and soon the necessity is going to run out. And it's the same thing you see in the supermarket. When the prices go up, people stop going to the shops. Okay? When the price of the S&P goes up, people stop buying because it's too expensive. It's too high. And hedge funds, institutions, professional traders, everyone who's on the correct side of the market and makes that small amount of people knows that, and they short. Okay? And they short heavily, and it gets flattened. And you'll find that will occur to some degree. However far it falls is yet to be seen. But ideally, I would like it to this level of key support at least before I start to buy anything. Okay, anything. I am not long unless that happens. Okay, like I said, if it goes higher, it goes higher. But that's why you need key risk plans, because there'll be people sitting here who won't short it because they don't know what they would do if the price goes higher than the previous high. They've got no idea. Okay, and that is the problem with trading for many people, and that is why I spend hours talking about risk management, how to control your portfolio, your drawdown, everything. So nonetheless, I'm short biased on US indexes, the German index, the UK FTSE, the Australian index, the CAC. I am short on all of it. They're all taking that global impetus, that global positive outlook that is causing an intense rise in the value of all of them. They're convinced people are going to start investing in the stock market and they're going to sell out their currency. Because obviously, if your interest rates aren't rising anymore and they start to fall, as you've had many speculating in various economic jurisdictions, it makes less sense to save money because you're better off in the stock market. Essentially, that's how people feel. Now, whether that has actually happened yet, okay, for many central banks will say the full force of inflation and the tightening, putting up rates is not felt yet. So what do you think is going to happen when it gets felt? What do you think is going to happen when companies start to say nobody's coming anymore, and perhaps the price of the index won't rise? Like I said, the necessity ends, the sentiment changes. Markets are simply a transition from positive market sentiment to negative market sentiment, positive bias to negative bias to positive bias. It's an interchanging mechanism constantly. Okay, being on the right or the wrong of that depends purely on key price action rules and understanding of natural market moves and key risk management, equity drawdown control. All of which, as I said, I teach very carefully, and in January I'm opening a further private trading room. So if you want an early spot, you will have to get with me on that, or go under this stream as well if you haven't bought any access at all. So yeah, okay. So that's your S&P 500. I'm sure many are considering the NASDAQ potentially as something they want to trade. Bias is exactly the same. You're coming to a previous historic high. Therefore, and just again, I like to say this, say it with me. What happened previously? Boom. How far does the market retrace? How much do you want it to retrace? Is probably a better question. It's 100% of that move. And if you take it right from the doldrums with COVID, 61.8 fib. It comes to before it bounces away. That's a considerable drop. So coming to the same space again, where people have previously slammed it short, just as you saw in my US dollar, Japanese yen incessant videos calling it short, and it's imploded, by the way. Okay, I called it short, I called it short, I called it short. I said that is your short area. You've seen it before. You've been here. It's almost like deja vu, although it's factual deja vu, where it's no surprise this time. Okay, you could have expected it, or at least the probability grows, and you're almost at your earliest MA, but you've come off from 152 to 141. It's an enormous fall. Okay, so you should be very, very well aware of that. But nonetheless, in the same light, same principle, I am short all global indexes, and I fully expect an impending fall, at least on the US 100 in this case, to 16,000 points. and beyond, I would say, later on. But first exit and only minor long scalings will occur for myself in line with my natural bias and the overall long-term spectrum of the market there. So that is your US